What is going on, traders? Welcome back to the Traveling Trader. Happy Wednesday to you. As you can see, I'm currently not in my studio environment. I'm on Chile for those of you that have been following me on the YouTube stories, as well as those of you that are on the Discord. Anyway, but that's not important. Let us talk about the cryptocurrency market as a whole. Looking at the market cap, we're getting dangerously close to falling below 250 bill. Actually, if you look at, by some measures, depending on where you're looking at, that was on cryptocurrency, on coinmarketcap.com. But if you look at the cryptocurrency total on TradingView, we are actually below that. We are currently at around 240 bill. So there's a couple of things I wanted to talk about today. When things like this happen, when we do have these flash crashes that seemingly are unexpected, I think that there is more panic and gloom and doom than there needs to be. Also, I think that we need to put things in perspective in terms of what these retracements mean as a whole, and also look historically and see whether we've suffered similar situations in the past and what was the outcome of those situations, right? So looking at Bitcoin on the weekly, we are now at around 9160. So I said this would be a tough resistance point to get through. And, I was having not an argument, but a bit of a discussion on the Discord with some of the other traders that, the more that a resistance level gets tested, the stronger it becomes. So there is this thought that the more a resistance level gets tested, the weaker it becomes. But that's not true. If you look at the textbook definition, the more that something is tested and retested without being broken, the market deems that as, it holds weight to that level. It deems it as an indestructible level, and it becomes stronger and stronger and harder to break through. It doesn't mean it eventually won't get broken, but the more that it is tested and retested without there being a breakout above that resistance level, then it becomes more solidified. It's almost like it starts digging its heels and becomes more set in stone. And that is the case with this resistance level that we see here at 11.8. It's crazy how fast crypto moves because, we're now talking about, we're so far removed from 11,800 that just a couple days ago 11,800 was the goal, and now getting back to 9,500 is the goal. So that's how fast crypto moves. But anyway, this level, obviously we spent 7 weeks trying to break it back in January 2018. We couldn't, fell down, the market crashed. We were definitely in a bear market all year last year, and we finally climbed out of that rut, reversed, went above the vital 6,800 level, which we're supposed to get above to indicate a reversal. And we are now finding resistance at this 11,800 again. That's why when you hear me say that the weekly on Bitcoin is going to dictate everything, it really is. I mean, you see that the stoppage that it has experienced here at this level, and it is because of how stubborn this resistance is. And so everything that really goes on the daily or the 4 hour is a culmination of what's going on here on the weekly. So we could essentially spend some time here. We can spend, we spent 7 weeks trying to break it here before. We could essentially spend some time here trying to break it. And we've seen this on coins or stocks before where, the resistance lasts for months before an eventual breakout or a breakdown and a bear market once again. Now, I don't think that will happen. I don't think that we've seen the kind of momentum that we've seen coming out of the ashes of 3,100, 3,200, all the way up to almost 14,000 for us to then just ignore this rally and say, hey, that was a good few months. We're now back in bear market territory. I don't think that that's the momentum that Bitcoin is moving. Yes, true. Last bull market, specifically on Bitcoin, we really didn't have any resistance between 10,000 and 20,000. We crossed that in 14 days. And there wasn't any major resistance doing so. But every market cycle does not have to be identical to each other. Now, if we take a look at the total crypto market cap, and I'll get back to Bitcoin in a second, but if you take a look at the total crypto market cap, at least according to TradingView and not CoinMarketCap.com, you see that we are now in almost a 40% decline from the highs that we saw back in, what was that, June 26th. So that is the first 40% decline that we've seen since climbing out of the bear market. Now, why is that important? Well, because if we take a look at the last rally, or at least the road to the last rally, you see here back in September 2017 we had a 44% drop from high to low, and then back in December, even during the actual bull market where we did hit the all-time high market cap and the all-time high price on Bitcoin, we had this 42% drop in December. People don't remember this, and that's why I'm saying that perspective is very important, because while you're in it, while you're in the thick of it, it seems like the worst thing in the world. And, revisionist history and recency bias are two symptoms of trading. It's definitely something that comes from human psychology, where while you're in it, it seems like the worst thing in the world. But if you look at prospectively and look at the past, we've seen this before, even during the bull rally. So am I too worried? No, I'm honestly not too worried. I do believe that retracements are healthy, and that's the way that we continue to get an upward rally. And I've said it before, I would much rather have Bitcoin hit 20,000 gradually than in 14 days double in price to 20,000, where nobody, including the crypto enthusiasts, believe in that rally. And so Bitcoin then comes crashing down because no one thinks that it should be at that price. Looking back at Bitcoin on the 1 month, this is something else that I've said, but essentially, in order to stay above the 21-month EMA, which is this white line here, right? And it's a pivotal white line because, being above it is what propelled the run-up to the bull rally, as well as the bull rally itself last time. And being below it is when we were in the bear market, we were well below the 21-month EMA, forming this rounding bottom before climbing out again. So the bull market can continue as long as we're in the long term above this 21-month EMA. And the scary thing is this 21-month EMA is at right around 6,500, maybe a little below 6,500. So on the long term, we can maintain above 6,500 and still be in this bullish position, at least according to this indicator on the monthly chart. Now, I don't think that will happen, because on the other time frames, a lot would have to break down and be invalidated to get to that level. And I'll look at the daily in a second, but I just want to give you perspective that we could fall, to the 21-month EMA and still remain bullish in the long term over, using the 21-month EMA as your indicator. Looking at Bitcoin on the daily, now there are a couple of levels here that are established from the daily. We're down 34% from the 13,900 level that we saw back in June 25th, 26th. But the first level was the 21 day EMA. We broke that. The next level was the 50 MA, which was right around the 0.382 level. The first time we hit this 9,800, I had a leverage position, which was a couple days ago. I had a leverage position on BitMEX, a leverage long, which we made 30% on. If you want access to the trade alerts, link is in the description. I did expect that to hold, and so I did initiate the same play once we sold for profit. Yesterday, I did also open up a long on 9,800, and it quickly closed and hit my stop limit at 9,700, because we did end up breaking down below that 0.382, below that 50 MA. So the next level down is 8,500, which is at the 0.5 fib level, and the next level down before that is the 100 MA, which is at around 8,100. So there are a few levels on the way down. Again, it does seem bad, but relative to crypto, 34% retracement is typical. It's not something that's out of the ordinary. You do expect sort of to be in that 30 to 40% range before continuing up. I will say that I do think we will hit one of these levels here, and currently I'm mostly in fiat. There are a couple of alts that I'm looking at, like Litecoin. I'm looking at certain levels, and I did send out trade alerts for that. But Litecoin looks like it's bouncing off of the 0.618 fib level, which is at the 200 MA, this green line here. So there's definitely a couple of discounts that I'm looking towards, but I'm mostly in fiat. You don't have to be impatient. As Warren Buffett said, the markets are just a tool to transfer wealth from the patient, from the impatient to the patient. Anyway, quick little video for you. That is it for this video. If you want access to the trade alerts, link is in the description. Follow me on the YouTube stories if you want to see some stories from my travels and my trips. That's usually where I post them. I'm not really active on Instagram, even though I should be, but there's too many platforms right now. Subscribe to the channel if you haven't already. Hit that thumbs up if you got anything out of this video. It goes a long way, so please hit that thumbs up button. Comment if you have any question or disagreement, agreement, etc. Stay safe out there. Peace.